Hi. Well, the reason for that downtick in shares is really because Tencent struck a note of caution on its earnings call, but also reported a mixed bag when it came to the results. Revenues were up about 21%, but missed expectation. Profits were higher by 35%, but beat market expectations. And just want to dig into why you saw those results. Firstly, there was an improvement in the gaming division, which of course has been hit over the past couple of quarters because Chinese regulators put a freeze on game approvals, and that really hurt Tencent's business. Those game approvals have been restarted. Some of Tencent's games have been released and are beginning to be monetized. Tencent said in the coming quarters as well, you will see more of that monetization being shown in the results. The second bright spot for the company was a 37% rise in their fintech and cloud services business. Now, this is to do with their WeChat Pay business, their wealth management business, and also their cloud infrastructure business, which they sell to other companies as well. Well, those were the bright spots. Let's look into where some of the weakness was, and that mainly came from the advertising segment. While the revenue growth was around 16%, that was much slower than the 25% seen in the previous quarter, and that's due to a slowdown overall in the Chinese advertising market, but also increased competition from new entrants like the owner of TikTok, ByteDance. That's really weighing on the advertising segment there, and Tencent said in the earnings call that kind of slowdown in the market is expected to continue to weigh on the advertising segment going forward as well. I was listening into the earnings call last night. They struck a note of caution. There was worries about the broader macro environment, and you actually saw Tencent cut its investment and capex in Q2 as they become more cautious about how much they're spending. A number of headwinds. One, the regulatory environment here in China when it comes to gaming. Second, the slowdown in the ad market I mentioned, and of course any kind of negative sentiment when it comes to this broader US-China trade story. Dan, back to you.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.